The semiconductor industry is trading at wildly different valuations despite being in the same sector. Some stocks trade at 3x PEG ratios, others under 0.25x. Today, we're ranking the top 15 semiconductor stocks by PEG ratio, price to earnings divided by growth rate, to find which are expensive, which are fair, and which are screaming value. The top two will shock you. PEG ratio context. Under 0.5 is extreme value, under 1.0 is undervalued, 1 to 2 is fair, above 2 is expensive. We're measuring how much you pay per unit of earnings growth. A 0.20 PEG means you're paying 20 cents for every dollar of growth. That's either a steal or a value trap. Let's find out which. Starting from the bottom, the expensive tier. Texas Instruments at 3.11 PEG is paying over $3 for each dollar of growth. They're a mature analog chip company with steady but slow growth. Lam Research at 2.70 makes semiconductor equipment, cyclical business with high valuations. Qualcomm 2.58 trades on 5G and smartphone exposure, but growth has slowed. ASML at 2.57 is interesting. They have a monopoly on EUV lithography machines, but the market has priced in years of growth already. These aren't necessarily bad companies, but at these PEG ratios, you're paying a premium that assumes flawless execution and sustained high growth. The margin for error is thin. Fair value tier. PEG ratios between 1.4 and 2.1. Analog devices at 2.08. ARM at 1.89, Advantest at 1.78, MediaTek at 1.58. Then we get to the interesting names. Broadcom at 1.40 and AMD at 1.39. Broadcom is benefiting from AI networking chips and data center build-out, enterprise infrastructure play. AMD competes directly with NVIDIA in GPUs and Intel in CPUs. A 1.39 PEG for AMD suggests the market is pricing in moderate growth, but not explosive AI-driven expansion. These are reasonably valued given their growth prospects, neither screaming buys nor obvious overvaluations. Value tier. PEG ratios under 1.0. NVIDIA at 1.04 barely makes this tier, which is fascinating given the AI hype. The market is pricing NVIDIA for continued AI dominance, but not at insane multiples anymore. Taiwan Semiconductor, TSMC, at 0.76 is compelling. They manufacture chips for Apple, NVIDIA, and AMD. A 0.76 PEG suggests the market is worried about cyclical demand or China-Taiwan risks, but TSMC's manufacturing moat is nearly unbreakable. Marvell, at 0.72, focuses on data infrastructure and networking, AI tailwinds but less visible than NVIDIA. These represent genuine value if you believe in sustained semiconductor demand. Extreme value tier. This is where it gets shocking. SK Hynix, ticker 000660 at 0.23 PEG. Micron Technology, MU, at 0.20 PEG. You're paying 20 to 23 cents for every dollar of growth. Why so cheap? These are memory chip companies, DRAM and NAND flash storage. Memory markets are notoriously cyclical with brutal oversupply demand swings. The market remembers 2022, 2023 when memory prices crashed and these stocks tanked. But here's the counter-argument. AI servers need massive amounts of high-bandwidth memory. Every AI training run requires terabytes of DRAM. If AI infrastructure build-out continues, memory demand could exceed supply, driving prices and margins higher. At 0.20 PEG, Micron is either the value of the decade or a value trap if memory markets stay weak. SK Hynix at 0.23 offers similar risk-reward with Korean market exposure. Here's the investment debate these valuations reveal. Logic chips, NVIDIA, AMD, Broadcom trade at 1.0 to 1.4 PEG. Memory chips, Micron, SK Hynix trade at 0.20 to 0.23 PEG. The market is saying logic chip makers will capture AI value through GPUs and networking. Memory chip makers will face oversupply and commoditization. But if AI infrastructure scales as projected, memory becomes the bottleneck. High-bandwidth memory for AI training is specialized, not commodity. Micron and SK Hynix could see explosive earnings growth if memory prices recover. The question, are you a value investor betting on mean reversion in memory, or a momentum investor staying with proven AI winners like NVIDIA? 15 semiconductor stocks, PEG ratios from 3.11 to 0.20. Value hides where everyone's afraid to look. Choose wisely.